Hi everybody. My name is Olga with Gem Accounting and Tax. Gem Accounting and Tax is a CPA firm that works a lot with organizations in early childhood education. So today we want to talk about life-changing events that can affect your tax return. An example of this would be marriage. Marriage will affect your tax filing status. So if you're married as of the last day of the year, that is the 31st of December of that year, your filing status will likely change. In the same token, divorce will also affect the outcome of your tax return. So whereas previously you were filing separate jointly with your spouse, a divorce may mean that you now file separately. And filing separately as a tax status also changes or affects the outcome of your tax return. Second, having children. Having children, of course, it's a blessing, but it also affects your tax return. When you have kids, you are eligible to claim the child tax credit, and this can actually, for most taxpayers, this can actually result in an additional tax refund. On your tax return. So for each child below the age of, I believe it's 16, you would be eligible for a $2,000 refund. Don't also forget, if you have older kids in college, full-time students, they can also be claimed as dependents on your tax return. And also, if you have elderly parents that you care for, they can also be part of your tax return as dependents. And of course, this will affect the outcome of your um, tax return. Another life-changing event could be when you purchase a home. So when you purchase a home and you finance it using a mortgage, the interest, the interest that you're paying on that mortgage can be written off. So part of that interest will help lower your tax liability. Of course, depending on the circumstances of that loan. You can also write off property taxes on the home, and maybe also include auto, like vehicles or boats that you own. So buying a home definitely changes the tax outcome. So that's another life-changing event. Then, if you change jobs, it could be that you're moving to a different state for your new job. Did you know that there are certain states within the United States of America that are no income, uh, uh, they don't have any income tax? An example would be Texas or the state of Washington. So moving for a job or moving to a new state might affect the trajectory of your taxes. So very important that you understand this. Some of us may have side hustles. So those people who are doing Uber, the influencers, they might be paid as contractors. When you get paid as a contractor, it means that you're likely going to pay self-employment taxes. So self-employment taxes are usually higher than for people who are on W-2 wages. But then again, when you are on a 1099, it also means that you're eligible to write off a little bit more than a W-2 wage earner. So an example would be you may be eligible to write off business mileage, especially if that mileage is for you to earn that income. Okay. Another life-changing event that can affect your tax return outcome would be in the case of an unexpected loss. This could be due to the unfortunate death in a family. It might result in certain inheritances or you having to move. So when you have such a situation, it's going to affect the outcome of your tax return. Very, very important that you understand the impact of such a life-changing event, and don't hesitate to reach out to a tax professional to help you navigate through that. Um, Putting money aside for retirement contributions can also change the outcome of your tax return. Now, this might not be a life-changing event, but I think it's a good practice to set aside money for your retirement. Of course, when you're young, you're physically able to do most jobs, but as you get older, you might be you might want to scale back a little bit. So it's a very good idea to set aside money for your retirement. This not only reduces your current year tax return, but it sets some money aside for your future. So, as you can see, life changing events will affect the outcome of your tax return. And so, it's very important that you work proactively with a tax professional. Don't wait until the end of the year to start planning for some of these things. Give your tax professional a call and see how these events will affect your tax return at the end of the year. If you have any questions, please don't hesitate to reach out. Again, this is Olga with GEM Accounting and Tax. Have a wonderful day. Bye.